Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. This is the third in this 5-part series about 1031 tax deferred exchanges. Now, we've talked about the definition of it. We talked about the advantages of not having to pay taxes, not having to pay inheritance, and your family starting over from scratch brand new once they inherit this property after you die. And then we've also talked about some basic rules. There's some other rules, but those are the basic rules that we discussed. Now, what is an exchanger? That's the thing. How do we work with an exchanger? Now, exchanger is a third party and is an integral part to this system. Now, you cannot, first of all, touch your money. That's another rule in this exchange. Now, I will tell you one little extra thing. Let's say you have that $150,000 I talked about. You can separate out and take $50,000. That's taxable, and then just do the $100,000. Now, what most people do is do the whole amount. This amount has got to be held in escrow. It can't be touched, and it's got to go through this exchanger. Now, the good news for you, it's very easy to find a good exchanger. We've worked with a company called Asset Management for years and years, one of the big companies. But most title companies that are used for closing have a really good exchanger that you can work with. And they're going to help you establish, what you need to do, the basis you need to spend. They're going to help you do all of this. They're going to talk to you about, reimbursement of earnest money, which is something we'll talk about in a Zoom meeting, because very often you've got enough money to pay closing costs as well as the down payment and everything else. And so we'll get into that a little bit later. But essentially, here's the thing. When we write a contract, we have to put into that contract subject to acceptance of a 1031 tax deferred exchange. And the reason why this has to be in there, that language has to be in the contract, is because there's this brief moment, a nanosecond even, where this flows through the exchange company, the exchanger. So neither the buyer or the seller, you could say in a way, owns the property. Now, this has never been glitched in my 31 years of doing real estate. But that's one of the things that are in there. And they are there to give you really solid advice. There is a fee involved on an exchange or reverse exchange, which I can talk to you about a little bit later. But that is what the exchanger is there for, to make sure that this process works properly, that all things are coordinated with you, with what you're buying, with the title company, everyone. They're going to be an integral part of this process. We know really, really good ones. We know how to work properly with them and coordinate all this. But an exchanger is going to be, in this process, your ally and one of your best friends.